I'm buying a house right now with using Homey, and they're giving me 50% of the buyer agent real estate commission as a rebate towards my closing costs. Man, like that's real cash that I don't have to bring to the table, and that's for many customers and consumers out there. That's a difference between buying a home and not. That's a difference between the American dream and not. Right. So those are really really. I mean, those are huge savings. $20,000 on average, if not more.
Cash flow. Cash flow. Did you clear your cash flow?
What's really cool, or maybe just interesting to me, is that Silicon Valley tech companies, like the kind of like the software movement over the last few decades have just disrupted industries sort of one at a time. And we saw it first with like retail and e-commerce in the late 90s and that big boom. And then, we're seeing it ripple out to different things. The mid 2000s, we have Uber and Airbnb and taxis and hotels getting disrupted. And it's interesting, you have like Zillow and Trulia and these consumer apps, but I haven't seen like the realtor model get disrupted until like the last, few years. It seems like it's starting to, really be like more of a thing. And like, that's exactly what you guys are doing. As I dig into what your business is, it's like kind of disrupting that traditional realtor model. And I'm just really excited to learn more about it today.
Yeah. Yeah, I think that's exactly right. Thanks for having me, man. It means a lot for you to take some interest in Homey and what we're building here. So yeah, appreciate it.
I love the name, by the way, too.
It's one of the many favorite things at the business that we love. Yeah, the name's pretty cool.
Cool. So yeah, I mean, I was looking at your LinkedIn, like you started out in sort of like investment banking, private equity, and then just like started this company. How did you get to that?
Yeah, let me share sort of my story, and then I'll weave in the Homey creation story. And I think that'll kind of lay out what we're building. Homey, we're super mission driven. I think sometimes even to a fault, even when a transaction doesn't go exactly smooth. Mostly not because of us, if I'm being honest. I need to be humble, right? We'll pay for a couple of nights for a customer to stay at a hotel just to make it right, because we want to make sure that the customer experience, first and foremost, goes well, right? And buying and selling a home is super, super stressful, right? So, at Homey, we're super mission driven, and hopefully by sharing my personal story, everyone here and the listeners kind of figure out, okay, cool, that this is why, we're building what we're building at Homey. So I grew up in South Central LA, immigrant parents. My mom moved here, just like many other folks, right, for the American dream, for education, free markets, and it's just been an amazing story, kind of looking back at what my mom's been able to do. Unfortunately, when I was super young, my mom got divorced. She raised 3 kids all by herself, convinced my oldest cousin to co-sign for her first house post the divorce. We unfortunately did not get the house. Grew up in South Central LA, a pretty rough neighborhood, a couple blocks away from USC, if you're familiar with the area. Quickly found out that we couldn't afford the home. So we lived in the garage for the better of 2 years, if you can believe that. No HVAC, no plumbing. We had to make a schedule in the mornings and in the evenings to use the facilities because, of course, the renters were using the front house.
I was going to ask, you rented out the house? You still owned it? You rented out the house, and you were a kid staying in the garage?
Yeah, that's right. I was about 9 or 10
Wow.
when that happened. And my mother did everything to put us through, raised 3 kids all by herself. We'd wake up at 4:30 in the morning, do the LA Times news route. I'd get dropped off at 5:30 a.m. to go to the San Fernando Valley to go to junior high and high school, which was wonderful. Got me out of gangs and drugs and crimes, and really opened up my mind to sort of what could be, which was really, really, really wonderful. My mom was a seamstress, so after that she'd take some garments, pick me up from the bus stop, or I'd walk home from school. Through that, we go to my aunt's, wholesale produce shop and sell produce from the back of a 1991 pickup truck. And kind of weave in through neighborhoods and selling, mango juice and watermelon juice and fruits and vegetables. So at an early age, you just kind of knew about the hustle and the grind. Actually, my nickname at home is actually Hustle. And that's where I kind of got my work ethic from her, and sort of, trying to be studious and take advantage of education and trying to work with the mind, not just the back. And let's see, my mother got remarried, and then we moved to Las Vegas, and that's really where the homie creation story comes from. So, study architecture at UNLV. I love architecture. The built environment is one of the biggest passions. I thought I was going to, grow up to be an architect and go to college and play football at USC down the street there. That was like my dream at a young age of 10 or 11. I was one of those geeky kids that had a vision board, and I just knew that that's what I wanted to do. And pursued architecture as I shared at UNLV. Put myself through college by waiting tables, which sounds fairly normal. The crazy thing is I was waiting tables on the Las Vegas Strip, making over $100,000 a year, which was crazy. So I'd wake up super early. I was an intern at an architecture firm. In the afternoons, I'd go to college, and then in the evenings, I'd wait tables. This is 2004, 2005 or so. And then a couple crazy things started happening. Everyone, at waiting tables got into the mortgage game or the real estate agent game. Getting licensed is not the hardest thing to do. There's a lot of really great real estate agents and loan officers out there. But from the masses perspective, it's not a hard profession to get into. And then I got caught up in the subprime crisis, buying homes 2 at a time, stated income, no money down, 1 year, 2 year arms. Just the dumbest and most irresponsible thing I was doing. And from my perspective, I was doing it along with these
What year
professionals.
was that?
Oh, so this was 2004, 5, 6, leading up to 2009 and 10,
okay.
right? And we all know what happened in 2009 and 10, and I lost everything. I literally lost everything. I moved back into my mother's house with about $200 in my pocket, just feeling defeated, and there were some dark moments through that, and then I woke up in the middle of the night with this epiphany, feeling like, gosh, I gotta fix this problem. Like it's my problem to solve. And honestly, I still feel the same way, even more so because I think homie and we're actually doing it. We're making a dent.
I'm curious though on that last story, like that's I don't want to skip over that. So when you kind of went through that, like that rise and then fall with the housing crisis, what was happening there? Were you buying investment properties that you were illiquid in, or what exactly happened?
So we would rent them, right? I'd buy one and then I'd move into it, and that was great. And then 6 or 7 months later, buy another one, rent that one, then buy into a bigger, nicer, better neighborhood. And that happened for a couple of years, and that was great. On paper, it was worth a lot of money. And at a tender age of 21 or 22, I just felt like we were winning at life. Like this is great, right? But fast up and then fast down, and then the market crashed.
Especially in Las Vegas.
Las Vegas,
Las Vegas got nailed,
really,
right?
really hard. Yeah, and a lot of people lost their jobs, and then renters stopped paying their rent, and you end up trying to subsidize 1 month of rent, then 2, then the mortgage, and then all of a sudden you just run out of money. And that's unfortunately, and I lost my job. The architecture industry and sector just got pretty much demolished, right? There's no construction, no design work to be done. It ended up ensuing to the largest recession since the Great Depression. So it fundamentally changed a bunch of things, right? So I had no idea what I was going to do with my life. So then looping in on my LinkedIn profile there, I decided to go back to college because I needed to start all over again. Decided to study finance and economics, and then I started my finance career as an investment banker. So did that for almost 2 years. Learned how to work, man. Learned how to grind. Worked 15, 16-hour days every single day. And
you weren't grinding when you were selling the mangoes out of the truck?
Yeah. I mean, I was for sure. But I think as a kid, right, you're just like, I was slightly embarrassed because it was just one of those things that I can't believe I'm doing this, but just like ignorant to the fact, right, that this is your life because you're just so young, but yeah, and I think, I was probably grinding since 8, for sure. And then, but learn the language of business, learn the technical skill set around financial modeling and doing transactions, understanding all the parties' motivations from the iBanking perspective or the target, the investment opportunity, all those good things, which is wonderful. I loved it, and I feel like I learned a lot. And then I married the love of my life. I reconnected with my wife. And then I moved to Salt Lake City, which was great. I love Salt Lake City. And then I worked in venture capital for a couple of years, and that was another wonderful learning experience for me, both personally and professionally. And learned about portfolio construction, how to raise a fund, helped them raise a third fund, which was really wonderful. Understanding and interacting with LPs. It doesn't matter who you are, right? The big bad VC still has a boss, and those are LPs. So that was really wonderful for me to learn. No matter, what industry, someone always has a boss. And that was really cool. And then how to value businesses. We invested in enterprise software and consumer branded products. So that was really cool. Got to hang around with a lot of really smart entrepreneurs and smart people. And it just kind of forces you to level up your game. And that was really cool. And then in the summer of 2014, that idea to come back to entrepreneurship and disrupt the real estate industry that I felt was like my personal calling. I just couldn't shake it off, right? I just couldn't shake it off. I started seeing Lyft and Uber and Airbnb being so disruptive and effectively marketplaces, right? Marrying hard assets like a car or a house with the mobile app and technology and trying to bridge those customer experiences together. I just couldn't shake it off, man. What I felt fundamentally is, the real estate model, I think, is backwards. I think it's not on the side of the consumer. You have that broker split, you have franchise model. Not generally speaking, not a lot of W-2 employees, if any. And then you have title and escrow and home insurance, home warranty, home inspection. I'll see if I can sound off more things. Mortgage fees, points in the front, points in the back. All these things that an average consumer really doesn't know. But peeling back that onion, the fees, right? All those services in a traditional and average real estate transaction, you're pushing 12, 13, 14%, right? That's ripping away the hard-earned equity of the consumers, whether they're buyers or sellers, right? Those two parties are paying for those fees. And I just felt like that was fundamentally wrong. And then, not having everything under one roof where you can create a really well-branded experience from, search to signature, and then from contract to close doesn't exist. Things are populating that way now, but I feel like we're the pioneers on that piece. We have Homie Title, does all the closing services. We have Homie Loans, does all the mortgage services. We have Homie Insurance as well, in addition to Homie Real Estate, what helps people buying and selling. And then, coupling everything under one roof, driven by technology, I think has been really, really cool to see. So that came together, pitched a handful of investors, some entrepreneurs, was lucky enough to partner up with a couple guys. We came together, founded the business in Salt Lake City, and then launched it. I think it was March of 2016, and 18 months later became the number one brokerage in the state of Utah, which was really fun. And then, as they say, the rest is history, and it's been a grind, especially the last year.
I bet. Yeah, it's been a rapidly growing and changing, real estate market. Even, I guess we're kind of in recession now or whatever you call it, but I still see, at least here in the Philly region, I still see houses are like, going for, they haven't really dropped much from their highs. I think the growth, like that crazy hockey stick growth in home prices has stalled, but it seems like the prices are holding where they kind of stalled at the top. So
yeah, it's so interesting. I'm currently buying a home and of course using Homie. And I've been buying and selling real estate for 2 decades. And what's going on in this cycle is a little bit interesting, right? We have high interest rates, still half as high as when our parents bought homes, right? 16, 12, 18% or what have you. Some time ago, of course, home prices were different then, but you have so much demand on the sideline, right? And then you have your first time home buyer. Every time interest rates go up, just more of those get sidelined and sidelined and sidelines. But yet, HPA, home price appreciation, still kind of up there, right? It's slowed down. It's softened up a bit, especially here in Salt Lake City, roughly 15% since May to last month. But, I'm buying a house and there's 4 offers. One of them was higher than list price. Luckily, we won because, our real estate agent is awesome. But it's just it feels almost like a hot market, but yet you take a step back and it's kind of like not. But then you lean in and it kind of is. So it's a really interesting dynamic that's happening right now. But I think we'll start getting into a more normal market, after a quarter or two. Summer and spring will kick in and there'll be a lot more demand as well.
Yeah. How big are you guys? Like, is there, in terms of like head count or, some metric to quantify?
Yeah, so we're in 5 markets. We have 130 employees, which is great. We're a little bit larger this time last year, so there has been some sort of reshaping as the market, does its thing, and the macroeconomic environment is those headwinds have come up. But I think kind of, the worst is behind us. But yeah, in terms of headcount, we're about 130 homies.
Cool. What's so I love that homies, like the Googlers thing. That's cool. Yours is way cooler though.
I'm biased. I agree, but yeah.
You gotta get like sideways hats or something.
Oh, they're in here somewhere. We got some swag.
So what's your prediction? There's so many people talking about the real estate market, especially
Yeah.
commercial real estate. That there's this huge bubble that's about to burst in commercial real estate in the future, and then
Yeah.
there's like obviously housing shortages for
Yeah.
for the size population we have. It's interesting to me in Philly here, like we've got these, condo buildings going up left and right, and they're like multi-million dollar condos. I have no idea who's buying them, but there still seems to be this like crazy shortage here of real estate. So like, what's your prediction? Where do you see all this
Yeah.
going in the future?
Man, I love speculating on this stuff. And I think it's probably one of my fun parts of the job, just trying to forecast what the future is, because obviously we have to be prepared for it, staff accordingly, make sure we're capitalized, take advantage of those things. And if they don't happen, right, how do you kind of pivot and maneuver around those things? So I think the Fed's going to continue to raise interest rates, to raise interest rates. I think you speak to anyone, I think that's kind of general consensus. How fast they go, I think is kind of up for debate, because they're obviously looking at economic indicators, right? Technically, we're not in a recession, which is really crazy, right? Things have softened up a little bit. Inflation is starting to soften up. But if you look at the sheer demand of potential buyers in the market, I think we need something like 3 million homes, 3 million single family homes across the nation to kind of meet some of that demand, or at least be in somewhat of a normal market being 3 to 4 months of supply. So if you take a snapshot of pretty much any market here, it's a normal market, right? You have X amount of listings that are active, but you compare that to last year, you're at 1,700 listings at the end of January here in Salt Lake in 2022. You're 7,500 now. 9,000 is sort of normal for that market. But you think about that delta, it's crazy, right? And now days on market are going to shrink a little bit more. As long as interest rates stabilize, even if they're 7.2%, 7.5%, which is fairly high for what we've been used to, 12 months ago when they were, sub three. I think the market just wants normalization in interest rates, right? And then that demand will slowly come in. Whatever goes up must come down. Whatever goes down must come up, right? We saw that with interest rates, and then the inverse in home pricing, which is now sort of starting to happen. And then in 2 years, guess what? Interest rates are going to probably drop again, right? So, what we like to say here is marry the house, not the interest rate, because 6, 12, 18 months from now, that can be, that can be adjusted, right? I think the Fed will probably overcorrect, in a quarter or two, and then they're going to, start declining, and interest rates are going to fall because you hurt demand too much, right? And it's kind of this balance that's so hard. They have a huge, I would not want to be in their shoes. All the Fed presidents, like, that's a tough job, and highly criticized as well. And then I think we'll see probably year over year on average, somewhere around a 5 to 10% decline in transactions, just because of those interest rates, continue to rise. But not too bad, right?
Yeah, interesting. What's his name? The chairman of the Fed,
Jay Powell.
Yeah, Jerome Powell. Yeah,
Powell.
He
That's
said
his
that
homie name.
What's that?
That's his homie name, Jay Powell.
Oh, Jay Powell. I love it, man. He said he came out and said that he was going to do like 2 more quarter point hikes, and then like a week later walked that back and said, "All right, maybe we're going to overcorrect and see what happens with that." And it seems to be affecting the growth companies most. Like anyone trying to raise a VC round, anybody tech stocks, public tech stocks that are high price to sales ratios. Like these companies had 30, 40 times sales multiples in the public markets, and it's they're getting crushed. I mean, look at like Teladoc was trading at like 250 a share, and now it's, I don't know, like 30 a share or whatever it is. And I guess it's just because with like there's safe like bonds, treasury bonds, people are just kind of waiting to see what happens. And the same, the housing market, it's all kind of like interconnected. And from an economist point of view, it's hard to pull it all apart and figure out like, it's like, making making a meal, like you put a little salt in it, it brings out all the other flavors, but it's, it's hard to know how it all like interconnects,
Yeah, that's right. I mean, baking chocolate chip cookies has salt in it, right? And it brings out exactly what you said. this is going to make me sound super silly, but like I found that out like maybe a year ago. I've never baked cookies from scratch, but like there's salt in, in chocolate chip cookies. And I think you're right. There's these sort of things that kind of play in. You think about unemployment rate, right? 3.5%, 3.4%. I mean, that's lowest in 40 or something odd years. And then you see the headlines, right? Google, Facebook, Amazon laying off XYZ, Microsoft, and you're just thinking, wow, something really bad's going to happen. And then next quarter, you see GDP kind of go up a little bit, or you see inflation drop, but just a little bit, where the forecast was maybe 25 to 50 basis points, right? And then there's just so much reaction. I think the worst thing that can happen is sort of stagnation, right? It's like when the market, specifically with real estate, right, sellers start getting locked out of selling because they have a sub 3% interest rate, right? So if they want to sell that, then most of those have to buy. Are they going to buy at a 7.5%, 8% interest rate? Some of those may just say, hey, I'm just going to wait this out 6, 9, 12 months. And I would just hate for that to happen. But no matter what economic cycle we're in, real estate, it just goes like this, right? It's a bell curve. There's Q1, which is generally slow but starts picking up on under contracts. Then you have Q2 and Q3, which is hot, and then you have Q4, things cool. Every year, no matter what market, no matter what weather does, no matter what year, it's just that bell curve that's pretty predictable. What isn't is obviously volume, right? That'll fluctuate up and down.
I've heard that before. Like the spring and the summer markets are hottest. What causes the bell curve? Do you know what affects that?
It's pretty general, but school, right? You have kids out of school that in the spring, no one really likes to move kids around. That's one big driver. Major events, right? If people get divorced or if people are moving jobs, those big things. But I think mostly it's, weather and then the season of schools. That's what I would say.
Yeah, that makes sense. The kids thing. But you're saying like the volume though, it's always the same bell curve, but the volume,
right. Yeah, that's what
changes. Might be like 10x during a hot market versus, maybe now it's slowing down because the interest rates are high.
Yeah, that's right. That's right. Yeah, and so, nothing ever goes to zero, which is crazy. Even during COVID, right? In some of the hot spots like Seattle and New York, and some of the heaviest months where things were really locked out, I think transactions fell 50 to 60%, in some of those markets. You would think that they would go directly to zero, right? But even under those crazy black swan type of events and circumstances, nothing really goes to zero that fast. And even in the sort of Great Recession in your Phoenix areas, your Las Vegas, I think the drop was somewhere around 35%, if I remember the data correctly. Again, crazy black swan event, didn't go to zero, didn't even go to 50%. So real estate is pretty predictable. Again, it's just sort of the volume. Is it going to be higher? Is it going to be a little bit lower?
Interesting. I had maybe I'm in the same industry as you. Jesse Burrell came on the podcast like maybe 8 or 10 episodes ago, and he's in Phoenix. He used to do flipping like what you did.
Yeah.
And he ended up building a bunch of SaaS software for like basically mining data from municipal data and tax data to figure out how to get like really good purchases. Like basically finding shells or finding land or like buying rehab properties. And his SaaS business ended up like his software ended up taking off. He's got like a 300-person SaaS business now selling this this property acquisition data platform. But it's I have to imagine like his flipping business probably got like hammered during that Great Recession period in Phoenix. That was like one of the hardest hit areas in the country.
Oh yeah, it's tough, man. It's really hard because there's opportunity in everything, right? In almost every circumstance. This is the sort of entrepreneur in me, right? Glass half full, kind of super optimistic kind of guy, right? But like, there's opportunity, right? That's where this whole single family rental institutionalization started happening, right? Your Invitation Homes of the world, your mega homes for rent. I think it was Warren Buffett that said, if I had some cash, I would go buy up a bunch of these single family homes and turn them into horizontal apartments, right? And then everyone started doing it. And there was opportunity, right? Because then you start buying these homes that were trading at, call it $100 a year ago. You can buy them for 15, 25, 30 cents on the dollar. rent them out, and then all of a sudden you have this wonderful portfolio. And real estate is tried and true. There's cycles for sure. They kind of last a decade at a time, generally speaking. But yeah, Phoenix got hit really hard. Las Vegas, the whole Sun Belt, right, got hit
Yeah.
super hard.
How big can Homie get? Like, is this a multi-billion-dollar company, or how far are you going to take this thing?
For me, I'm all in on Homie. My wife and I, we will do everything to make sure that Homie survives. We're all in on Homie. I think that the opportunity is really, really large, right? I think if you look at, some of the public comps, even, Redfin, for example, I think they barely hit about a 1% national market share. At some point in time, that business was worth $4 or $5 billion, right?
Does
And
Redfin do
maybe,
what you guys do?
I would say they do some things. I wouldn't say they do them as good as we do, but they obviously have more scale. They've been around for almost 2 decades.
I always thought
But
of Redfin as like a search app, like a consumer app. Do they
um,
have a different business behind them?
no, you can actually buy a home with Redfin agents. You can't do that with Zillow, right? You can only search, and they kind of match you up with an agent. But the search is such a big part of the process for buyers, right? And most buyers actually end up finding the home themselves before they contact the real estate agent. But I think our model can scale. I think our model can work. We've learned a lot over the last 18 months, especially and specifically where it forces you to kind of focus on what's core, what's essential, kind of ignore the noise and ignore everything else. And then just start driving for better unit economics that can drive profitability, overall. So, there's probably 150 large metro areas across the US that I think our business model can work. And man, if we can use some of the comp sets, a year or two ago, you don't have to have 1% market share to be $1 billion business. I think our unit economics are super solid. Gross profit margins are probably better than any of the competitors out there because we attach so well across all of our ancillary products like loans and title and insurance onto the real estate side, whether a customer is buying and selling, and that really, really drives a lot of efficiency. And that's what we're focusing on. So, man, I think it could be $1 trillion business, quite honestly. There's so much opportunity in real estate. I mean, it's what, 16% of GDP? That's huge, man. That's
I'm
huge.
putting it on the record
So,
right here, right now. So
boom, on 3/3/2023
there you
at
go.
11:33.
We'll come back in like 20 years and check the you'll be public by then, I'm sure. So we'll check the stock price and the
Yeah,
market
that's
cap.
man, that would be an amazing outcome for all of our employees and shareholders.
Yeah, that's cool. So I've used Redfin before, just like searching. I clicked around on your stuff before we hopped on here today. I think you've got a better UX.
Woohoo!
I
Thanks, man.
can't say what goes on under the hood, but like I think your UX is better, more modern. So already right there, just on like the quality of the consumer side of the product, I think you guys could probably do a better job in the market than them. So what? It's interesting to like wrap up all this stuff because I sold a house. My wife and I live in the city. We tried the suburbs for a year during the COVID period because Philly got like it was not good being in a condo building here during the especially the first year of the pandemic. So we bought a house, moved out to the suburbs, realized we're not suburbs people, so we sold it and moved back. I don't know why I didn't use like Homey or one of the more modern real estate transaction services, but I ended up going with a traditional realtor route. And yeah, the fees are insane. Paid a crap load in fees. Fortunately, we got wrapped up in the heat of the market, but then sold like right at the top in February 2022. So we I think broke even on the deal, which was great. Having only been in the house for a year. But yeah, it's like there's so many pieces. Like you mentioned the title insurance and the mortgage broker and the property insurance and all the contracts. Like I'm flipping through the stuff. The realtor's just like sign here, flip, sign here, flip. Yeah. I'm like barely. I'm looking at like the title on the top of the document before I even sign it. I didn't even read the thing. And
that's right.
So how do you guys simplify that process for your customers? Are they still signing these like 100-page packets of documents? And how do you like simplify it by consolidating all of these different businesses into a single kind of umbrella?
Yeah, I think having one brand, right? The Homey brand, Homey Real Estate, Homey Title, Homey Insurance, Homey Loans. Communication around education is key, right? Generally speaking, our demographics, highly educated. They love to do things on their own, the research, get up to speed. Most of our customers have bought or sold at least one home before, so they understand exactly what you just described. What is all this crap? The fees are so high. Okay, I feel more comfortable now because of that experience. But what starts with education and hiring wonderful employees. All of our professionals are W-2 employees. They're not 1099 contractors. They're 100% professionals, all in on their industry, on Homey, and that's what they do day in and day out. I think having that really provides, subject matter experts, experience, expertise, where they're sort of like your Sherpa. And there's a lot of really great traditional real estate agents out there, by the way. But I think, your average real estate agent, unfortunately, only does 3 to 4 transactions a year, right? Ours do somewhere between 4 and 6, 4 and 10 a month. So you get a lot of at-bats, you get a lot of experience that happens, and you share that, right? And then the communication flow and stream with the escrow officer.
But half of being a realtor is like being a salesperson. Like you're out grinding for leads. And
that's right. Yeah.
I guess the difference is like you're not making your realtors a salesperson. You're making your realtors a customer service person. And then you've got like, traditional tech, like you probably do like paid search and SEO and like all the tech, playbook to get the leads in. And then you're just on the realtor side, you're just focused on the customer experience to get the deal done.
Yeah, that's right. And the transaction, right? So by having real estate agents that don't have to knock doors, some of them like to because they have a sphere of influence. They want to build their book of business, which is great. But we have a really great marketing team, and our head of marketing, she's amazing. And when you have a brand, you rely on that brand to drive in customers, right, and leads, and then ultimately have a process where they turn into really, really, happy homes, we like to say. And it makes it a lot.
I love that, man. There's so many plays on words here.
Yeah, man. How much time do you have? But that's what makes the real estate agent more efficient, and then that's also what drives costs down, right? Which is really important for us because the number one reason why people use Homey is savings, and that's on purpose, by the way, because we fundamentally believe that buying and selling a home shouldn't cost you 6%. That is so much money, right? Where 90% of the transaction is rinse and repeat, regardless of the price of the home. Of course, there's bookends, right? There's the super, non-expensive one, and there's the super ultra mega expensive homes, and that's not what we're going after. But we are going after the 80% middle of the fairway transactions in homes where they're pretty predictable. There's a lot of data out there. They're newer homes, et cetera, and it just facilitates the whole transaction. And then again, having W-2 employees that are only working at Homey, and they're professionals, right? We are professionalizing the industry from our perspective.
Nice. How much on average do you get the fees down from a typical real estate transaction?
Yeah. So on the sell side, we charge you $3,500 flat fee, regardless of price of the home. And the reason why is because there's quite a bit less of work to be done on the sell side, right? Customer acquisition side to the side. But as a real estate agent or a listing agent, you're taking in offers, right? You're not the ones drafting in. So the work, that burden at least is offset by the buy side real estate agent.
So that's just the real estate commission, the $3,500 essentially.
On the sell side.
You still have all the other stuff like the transfer tax and all that stuff.
That's right. We can't control that, right? Because that's controlled at the state level, and different states have different transfer tax, if any. Traditionally it's 3%. To sell your home of the 6%. So 50-50 of the 6%, 3% to the listing agent, and then 3% to the buyer agent. On the buy side, we give you back 50% of that buyer agent commission. 50%, right? You get to use those proceeds to cover all of your closing costs, right? At the beginning of the podcast, we started naming off all these things, right? I'm buying a house right now using Homey, and they're giving me 50% of the buyer agent real estate commission as a rebate towards my closing costs. Man, like that's real cash that I don't have to bring to the table. And that's for many customers and consumers out there. That's a difference between buying a home and not. That's a difference between the American dream and not, right? So those are really, really, those are huge savings, $20,000 on average, if not more. And then obviously the title and escrow fees. Those industries are pretty crazy. They're regulated at the state level. So you have to charge a minimum. You can't charge anything less, which is super interesting to me on the, title insurance side. And then you have, home insurance, and then you have the loan fees. On the loan fees, we're a low cost leader there. We don't charge the 4, 5, 6% that a lot of mortgage banks charge because we just don't have that overhead, right? We're a lot more efficient.
Cool. So like you personally, you talked about kind of your finance backgrounds coming out of the VC world. Do you like to get into anything, detail level? Like, do you like to get into the product or the code or design or marketing, or like where do you like to tinker
Yeah.
outside of finance?
I think all my team, the leadership team, would probably say too much tinkering, right? I mean, I don't know how to code, and I don't see black screens in code, so that's probably the max. But I do buy and sell, a couple of properties a year, whether it's for friends or family. Like I like to take that on because I think it's important. And as CEO of the business, I think you have to understand everything. Sometimes I feel like I'll share things, and then our real estate agents, when we have our all hands meeting, or our loan officers may look at me and like roll their eyes, like Mike, that's not the way it goes. So going through the flow, I think creates some empathy for me, and really understanding the opportunities, and also the opportunities to share the wins, right? Like you shared that you liked our UX on the app. I agree. I think our UX is really wonderful on our app. It makes it really, really easy. And through time, we found out like, what's the most important data that our customers want to see? It's acreage, of course, it's beds and bath, but they want to see the photos, right? So the photos create this huge gallery. That's what people want, right? And we spent a lot of time there. For me, that's really important, right? Obviously, I've spent time on the finance and accounting side, fundraising, et cetera. I love marketing. I'm not a marketer by any means, but I like to understand, and I like to quantify as much as possible any data that we have, so that we make better business decisions, and ultimately, reduce the cost to acquire a customer and increase the LTV to CAC. I love the mortgage industry. It is such a conundrum to me, and it's so crazy how much money there is to be made on the back end. So kind of dabbling in that piece, I think, is interesting to me. And then obviously the psychology on, buy side real estate and sell side real estate is just fascinating. I mean, it's just so fascinating. And title is also some fun, for many, many reasons. So all of it, I would say, I really do. The business is super personal for me. It's really, really personal. So I do like to get into the details.
The UX, like I can't emphasize, that's so important to me as a user. I have a software development company, so obviously I'm like really big on UX for the products that we build in my company. But the UX is so important. Like this, I use the Trulia app if I'm just kind of checking stuff out just to see what's on the market and stuff like that. But that's a good user experience. There's the MLS locally here is called Bright MLS. Mm-hmm. And when the realtors in this area, like when they'll send you out the kind of like the listing information, or the feed of what's available when they put together the search, the Bright MLS email and then the web interface that it sends you to is so bad. It's like literally, it's got like tables and frames, and, it's like a desktop interface that they just crunched into a mobile interface, and you try to like pinch and zoom and it like breaks the page, and it's so bad. It's like so frustrating to try to like look at the property that you just got emailed. And I don't even know how, I don't know how that hasn't been a priority. Like I don't know whose decision it's been to just keep that going, but it's ridiculous that in 2023 it's ridiculous that like that user experience still exists.
I couldn't agree with you more. And I think that's what creates opportunity for Homie, right? How can we deliver one of the most important decisions for a consumer buying, a home in just a delightful way, right? From the palm of your hand, with a professional to guide you every step along the way, that's just as committed to you to the real estate transaction than you are, right? So, or as you are, I mean, that's why there's opportunity, right? And I think that's why Homie's going to thrive and, grow.
Cool. I think this has been a fun episode. Anything else that you want to plug or close out before we hop off here?
No, I'm just grateful for the opportunity to hang out with you, and thanks for reaching out. Thanks for having us, and for all the listeners. I think when it doesn't matter if you're looking to build something or if you're looking to use a product, understand their why. And for Homie, our vision here is to make homeownership easy and affordable for everyone, and that's really, really important. It's not a job, especially over the last 12 to 18 months. The homies that are here, leadership team, management team, employees, they're here because they believe in what we're building. They believe in what what Homey has to offer the consumer, and it's changing lives, and we have a testimonials page on purpose so that people can see that it's just much more than just building, a Proptech business that'll, grow, et cetera. It's just way, way, way more than that.
Cash flow? Did you clear your cash flow?